wealthy people and institutions have been able to invest in private companies, while the rest of us, the retail investor, are unfairly locked out.
Okay, folks, now, in the summer, Robinhood CEO Vlad Tenev announced a new exciting initiative, and that's all about tokenized private equity. Now, at the time, Vlad said this new initiative is hailed as a way to resolve what he calls one of the biggest inequities in capital markets, and that is the fact that people, ordinary retail traders, have to wait a long time for these to get access or to get exposure to these massive companies that are staying private for longer. In many cases, these private companies that people want to gain access to that are staying private, like OpenAI, SpaceX, the new bank called Erebor backed by Peter Thiel, things like that are at the frontier of industries like AI, digital assets, crypto, all of that kind of stuff. Now, Robinhood believes that this new initiative could change everything and allow retail investors more exposure in these private equity companies. But since the summer, we need to unpack what's happened. What are the new developments? What are the updates? And today, to help us with this, we're joined by Johann Kerbrat, head of crypto at Robinhood. Johann, really happy to see you again on Being Crypto. Thanks for joining us.
Great to be here. Excited to talk.
Now, Johann, what's Robinhood's broader vision for making private equity market investing easier for retail, as easy as trading stocks?
Yeah, I mean, I think you said it at the beginning, and you quoted that, but our opinion is that for decades, wealthy people and institutions have been able to invest in private companies, while the rest of us, the retail investor, are unfairly locked out. And if you think about it, it's happening more and more because it's easier and easier to raise venture capital, and especially if your company is having a little bit of traction, like some of the AI company recently, for example, they can very easily raise capital. And so what it means is that the retail investor is just having to wait basically for the company to go public, and then be used as kind of an exit liquidity for all these venture capitalists and investor. And so we think that's something that needs to change. There are different rules if you are in Europe or if you are in the US. But in the US, for example, you can't even participate in any private equity investment if you're not what we call an accredited investor. Accredited investor means that you need to have at least 1 million in net worth, or you need to have an income over 200K. And it doesn't really check anything else. So basically, if you've been lucky to come up in life with a bit of money, you are able to invest in private equity. If you're someone who's really spending a lot of time in the space, but you don't necessarily have the wealth, you actually can't really invest. There are some ways to do it through certification and all, but it's fairly complicated. And so what it means is most of retail is completely excluded. And so that's something that we want to change, because, in Europe, for example, you can actually pass a knowledge assessment. And if you show that you understand the risk and you understand what it means to invest in this opportunity, you're able to invest. So I think for us, that's really the main focus, is that we want to make it more fair, and we want to expand the access to private companies and basically bring people and give them the chance to participate in this market, and basically ensure that the free market includes everyone and not just the wealthy.
Yeah, well, there's a lot of, people are all kind of excited about firms like SpaceX and OpenAI and this new Peter Thiel-backed Erebor bank. And I know that in the summer that you talked about, part of the initiative was this OpenAI's private equity, or SpaceX private equity, but then there was some sort of confusion about how that related to the underlying asset. Can you sort of expand on that just for the audience, just so that they actually know what these tokenized private equity mean in relation to the underlying asset?
Yeah, so the way that we did it in the EU in June was that we gave giveaways, so basically like free tokens to everyone for these two companies. And what it meant is that we had an exposure to the company through different SPVs that we set up in place and we acquired. And so at the end of the day, some of the companies were not necessarily really excited to be part of this giveaway. But I think for us, what really it meant is that it's this continuation of this problem, right? For the company that are able to easily raise capital, they are not necessarily incentivized to actually include more people because it makes it a bit more complicated for them around disclosure, around the cap table, and this kind of thing. So we think that we need to force a bit the discussion here, and we have multiple initiatives. So in the EU we did this giveaway. In the US we announced Robinhood Venture, where we are also going to realize funds that people will be able to invest in, and these funds will be exposed to these companies. But really, I think for us, we want to make sure that what we offer are best in class, high growth private companies, and the people that basically are using these companies every day. Like if you think about all the big AI companies or all the big crypto companies, the retail are all using this platform on a daily basis. And so it's really just giving them a chance to also invest in what they care about, basically.
Yeah. Yeah, no, I hear you. And I think it's the democratization of this kind of private equity is kind of like, it's a great initiative. So could you sort of like unpack at what stages this initiative of tokenizing private equity is at in the EU and also in the US? So like kind of listeners know what stages it's at, what the interest levels at, if they're trading, kind of like trading volumes, overall impact, that type of thing.
Yeah, so we haven't opened trading just yet. Like I said, it was just a giveaway, so people were able to receive it. Not necessarily able to sell it until there is a price event. For example, if the company is going public or if there is a new raising round. I think for us, like I said, we have these two initiatives in the EU. It's a private stock tokens that we launched in the US, this closed-end fund, Robinhood Ventures that we launched. And we think, that it's really us trying on multiple fronts to advance this discussion and to make sure that at some point people will be able to do all of this. And, the demand has been actually incredible. Our customer, we knew from the beginning because it's been a long ask, but our customer really love it and they want more access to it. I think what we didn't necessarily anticipate is how many private company will actually reach out to us and say like, hey, I want to be part of this. I want to change the current system. And I also want to remove all the middlemen that are kind of getting a free lunch on the company being raised to going public. And that's really the key point where you think about it. Like, right now we're just at one phase of the entire growth of a company, but at some point you can see tokenization really changing the way that companies are able to raise capital, grow, and then go public. And, if you're able to remove some of these steps, you will actually increase the number of companies that can raise money, access the market, and also go public in the future. And at the same time, minimize the number of fees that you have to pay to every single VC, banker, and exchanges when you go public. And that value can go back either to the company or to the shareholder.
Yeah. Well, how's Robinhood doing in the sense of getting across that overall message where there is this feeling that there's a sense of unfairness in the system where, as you said, there are the companies that everyone is used to using that are still like in private equity stage. The normal person that uses these things can't get access to equity in the company. And you've got the sort of high benchmark that only the rich can access. So, how are you guys doing in getting this message out that you're trying to kind of crack this, genuine unfairness actually in the system?
Yeah, I think it's going to be a bit of a cultural shift. I think for a very long time, company founders and CEOs, I've been listening to VCs and banker and felt that retail was not necessarily a good portion of investors, that they will flip as soon as they go public, or that they won't be able to hold the investment, or these kind of things. And I think it's going to be a bit of a cultural shift where slowly you will see companies that are going public allocating more and more shares to the retail. You will see more and more companies opening grounds to things like we mentioned, like tokenized stock token, or some of the funds that we are launching. And once this shift happens, I have no doubt that people are going to understand how much better it is to actually have your own customer being shareholders, and also being able to go in the space a lot faster. If you think about it right now, if you make the analogy with crypto, a lot of companies have created their own token, and it's been easier for them to raise capital through this kind of token than to go directly to a VC. And so we think that's where tokenization can really change things. You could create your seed round, or your first few rounds through tokens, and you could basically go public the day that you want to be listed on a big exchange, or something like this, without having to involve all the middlemen and saving a lot of fees in the between.
Okay, so private companies are interested in this. You're kind of sort of showing them or emphasizing what's happened in the crypto space when it comes to like raises through like the crypto way and things like that, and the democratization of this. Now, then the big question is, I suppose, if, for instance, like people do invest in a private equity token, what relation does that have in the underlying asset? Like, what's the translation between purchasing one of the private equity tokens and actually owning equity in the actual private company?
Well, it will depend on the setup. If you have multiple ways to set up, you could issue directly share on the blockchain.
Okay.
The issuer is willing to work with the token issuer, or you can do things where you have indirect exposure to the company. And so what it would mean in that case, for example, that you won't really have voting rights, but you will still have all the benefit in terms of cash if the company is going up in price, or if there is an event like going public or raising a new round, you will have the same opportunity to basically cash out. So it's less about, I think, I think like a lot of the focus needs to be more around how do we educate the customer to understand what they are getting in. Like, for example, do you have the right to vote, or do you have any specific rights or not? But also understanding what it means to invest in private equity, right? The risk are a lot higher for some of these companies. Not necessarily that the companies are going to go bankrupt, but the valuation that is done on the private market is different from what is done when the company goes public. So I think that's where we want to focus on our role, is to make sure that when customers are investing into this type of product, they really understand the risk and what it means to be a private company. What are the financial disclosures that the company has to do, which are a lot lower than if they are a public company, and these kind of things, basically.
Well, like just intuitively, I think when this gets going, it's going to be massive. And I'm sure the competing sort of brokerages and exchanges out there will be dying to get involved in this. So do you believe that Robinhood have a good head start in this? Or like, I suppose, like, what's Robinhood doing to make sure that they just keep ahead of the game in this initiative?
Well, I don't think we necessarily want to be ahead of the game. I think we want to drive the discussion, because for too long this discussion has not been happening. And so that's why we did this big announcement in Cannes, in France. We wanted to start, be a bit more vocal about this kind of unfairness, in my opinion. And we think that we have the technology. That's kind of the main aspect here, is that if you think about a crypto token that represent a private company, we know how to trade it. We have platforms that can support, crazy volumes, and people can self-custody, not self-custody. All these things already exist and are used for crypto tokens. So we think that that technology can be used for anything really. We've talked about private equity, but could be real estate, could be art, it could be really anything. We think tokenization can really change the way that we are holding and investing into real world assets. And so for private equity, it's just a question of like aligning on some of these limitation that exist around investor rules, and also aligning on getting the CEOs and founders of company to be more excited about this way of raising capital. But our technology, once it's there and open to trading and everything, we want to make it accessible to everyone. So it's less a question of being ahead of the game and more a question of like, how do we make it accessible to as many people, and really finally democratize finance for all and not just a part of finance.
No, I think it's admirable what Robinhood are doing, and I, for one, would love to see it happen. But I think that I hear you, and probably the big challenge is to try and think of an incentive for those CEOs in private companies that are completely fine with raising funding from like in the traditional way of doing so, not the ones that actually look at what's happening in the crypto space and go, actually, that's an opportunity for us. But like, I'm sure that's the challenge for you guys, is to actually do that sort of communication with those particular CEOs, but also potentially working with regulators with what jurisdiction and stuff like that. Can you expand a little bit on the challenges there for those CEOs where there's no incentive, and also those regulatory bodies?
Yeah, I mean, I think on the CEO side, things are just going to shift slowly, and we've seen it to like I was saying earlier, when we launched it, we actually got a very large number of CEOs reaching out and asking us to be part of it. But I also think that CEOs will want to be part of this more and more, because it's so powerful when you have a product that people are using, and on top of that, they are holding share of your company. They kind of vouching for you. They are like customer with word of mouth are usually your biggest kind of marketing team, and the most efficient one. And so giving also the ability for these people to invest in what they really care about is going to be a big changer, I think, for a lot of companies, and they just need to understand that. There are also real reasons why CEOs don't necessarily want to do that. And it's more often the CFOs. It's because it creates a bit more work on the financial disclosure and what do they need to do. And that's something that I think we can be solving at the regulation level, and actually putting in place the right system for this company to not have the same amount of work to do that if they were a public company, but still getting access to retail. And I think for the second part of your question, overall, I think the regulators have been fairly supportive of this type of offering. I think they're a bit more interested to understand, like, how do we explain to customer what they are getting in. So for example, on Robinhood, if you want to invest in stock tokens, you will have to go through a knowledge assessment to make sure that you understand everything about the investment you're about to make. And that's the kind of thing that the regulators are looking at. But overall, I wouldn't say that regulators are not thinking that it's not something that we need to change. I think everyone is starting to understand that the current system is not really fair, and we need to change it.
Well, okay. Yeah, no, you're right. Like, democratization of private equity through tokenization is probably one of the best use cases for tokenization, I think. And I like that kind of halfway sort of mode where you could potentially do this in such a way where you don't need to have the same kind of I don't want to need to pick my words wisely here, but rigor when it comes to actual holding of the actual equity in the usual private equity way. You know what I mean? Through tokenization, you could potentially have a kind of a halfway system or something like that regulators agree on. I'm sure you're having conversations at the moment with them on that. But here, look, yeah, but no, it is exciting. Now it's early stages. What else is Robinhood doing at the moment? Okay, so you had the big announcement in the summer. Can you give us any previews of what's happening next? Are you just having a bit of an autumn lull at the moment, and Is there anything you can, pique our interest before we close?
Yeah, look, I think I wouldn't say it's a out on low. I think it's more of an expansion of what we announced in June. And so we went from launching in June with 200 stock tokens that are giving US exposure to US stocks and ETF. We increased that number to a bit more than 400, and we are about to increase it again in the next few months. And so you will see that the offering that we have around stock token is getting wider and wider. We also just rolled out Perpetual to all our customers in the EU. And so you can invest in multiple contracts, including BTC, Ethereum, Solana, and other. And so that has been something that's been really in demand by our customer. They can, utilize these contracts from 1 to 5x in terms of leverage, and they can isolate their margin or cross the margin like any normal perpetual platform. So I think we've had actually a lot of enthusiasm for this product. We really spend a lot of time building the right UI and UX for people to be able to place their stop loss or take profit orders. And, I think the fact that it's a regulated platform, that regularly gets audited and all these things, we've seen a lot of traction coming from customers that were usually in the past using DeFi for this type of product.
Well, yeah, but that's what I was thinking when you were saying that about DeFi and the challenge from platforms like Hyperliquid. So is this your argument really there? It's kind of the regulated, when you've got like a sort of a safer, more regulatory one-stop shop with Robinhood, whereas in Hyperliquid, it's not the same really.
Yeah, I think look, we love all the platform and the people working in the space. I think the main question for us is making sure that we protect our customer. And so it took us a fairly long time to get the right licenses at the right level, to get the right compliance system in place. And our goal is to make sure that, our platform works for our customer. And, in terms of pricing, we're also very competitive. So I think, that's kind of what we've been focusing on, like making sure that it's a safe platform for everybody to use, and also that it's a accessible platform in terms of pricing and the type of feature that customers are looking for.
Okay, Johann Kerbrat, head of crypto at Robinhood. Thanks for joining us in this great discussion.
Thank you for having me.